All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday the 10th. What a horrible open. And we've got a couple more. Let me out of here. Hell comes before heaven. My goodness. Today was a rough day. And I'm going to go ahead. I'm going to make a couple comments here. We trade individual stocks because Warren Buffett proves it works, because you get better returns, because it is easier to protect and pick up more shares. I'm going to make one other comment. Beam me up, Scotty. I love that one. One other comment that entices the oops of today. We don't day trade, and we aren't exclusively yeah, why not, technical traders, because it doesn't work. I'm frustrated today. I'm frustrated because we were smart. I should probably type that down, right? I'm frustrated today because we were smart and only took off half the protection, meaning half the stocks weren't protected this morning. But we added protection quickly. Kevin, what are you doing? Friday, we had some great profits and some good positions. So Friday, and yes, I know this is an 11-month chart. Friday, we had a day where the S&P broke the 200, hit the S2, which is the second support. It's like the second standard deviation support level, bounced up and finished just under the 200-day simple moving average. So instead of taking everything off, expecting a technical bounce higher, because that's what that meant, we took a couple things off. We took off well, I'm going to show you some of them, but we took off Block, we took off Google, took off Meta for a profit. We took off Micron for a profit. We had some great profitable positions that we took off this morning. Nothing like waking up at 5:30, and actually I sent Kiev Sunday night when the futures opened. It was down about 0.8, went down to like 0.42. When I went to bed early at 9 o'clock, it was only down 0.61. Woke up at 6, a little after, closer to 5:30. Got out of bed and actually was working at 6, is what I'm trying to say. And saw the market was down 1.6. Not really good, right? And again, called Keith and we're like, we made a mistake. Yes, we were running out of time. There are a lot of excuses I could say, but just because we're barely oversold on the S&P, just because we held a support level and we're awfully close to the 200-day, just because we're in like a 7-year low on a MACD, and just because the Williams percent R says we're oversold, does not mean that we're going to get a bounce higher. 1, 2, 3, 4, 5 technical indicators saying we should have had a bounce today, and they were all wrong. So the question is, what do you do? Well, we took off the XYZ, the block trades. Give me a quick second. I'm trying to find my notes. We took off the block $88 ones. Great. Had some great returns there, but man, I thought I had this done. But today we added $56. I mean, we took these off. They were $30 in the money at $58.59. We thought we were good. It still is way oversold. But we had to get some protection on today. Verizon, puts are off. And it's trading at $47. A couple of you asked me, Kevin, can Verizon really get to $52? That was a question. Hey, can Verizon really get to $52? And the thought process is today it finished actually at 46.49. Extended hours, it is up another 4 cents. We're getting there. NVIDIA, we took some profits on NVIDIA. We are now in a bear put spread, protected 112 down to 100, and we have short calls as well. Micron, we had 107 puts, we had 120 puts, we had 110 puts. We're making great money on the way down for Micron, but we took off puts. We now have Micron $89 puts out. Thank goodness, because it made some good money today. Meta, cashed in the 700 puts for some ridiculous money. I mean, we're making like $61,000 on the way down. New Meta puts are on at 615. Had to cash in some profit on that one. Google took off 180s, took off 170s. Well, today we're down to 165 puts. Took all those other ones off. What else do we have? Ford has no puts. Ford's almost at $10 again. Kind of nice. Disney, boy, we were smart. We did this last week though. Disney has 110 puts on in place. Baidu. Nothing sitting on Baidu. It's holding $92. And we are looking at adding close to the money short calls. 95, maybe 99 or hundreds. Probably going out a couple months so we get a big credit. Cashed in 45 puts on Bank of America. Made a killing on them. Really good. Got out at $41. Well, now we got 40 puts back on for Bank of America. In Apple, we had the short call. The short call is still in place, but we added today 225 long puts. With our short calls in place, we are looking to roll rolling those short puts for more credit to something around that 245 range. That will be above the 50-day and the 200-day for Apple. Very interesting, because I'm gonna rip on Trump a little bit. But the comment was, given that February was a losing month, was a monthly loss any worse than the usual February monthly loss? Yeah, by 0.5%. But here's our problem with February. In February, we went to a high of 61.47. We came down to the 58.12-ish range, right? Well, it was actually a little bit higher than that. But the problem with February is we picked up 4 or 5%, and now we're sitting at 56.14. So from the highs and the lows, we're down roughly 533 points. 533 points isn't horrible, but it definitely isn't wonderful either, right? Down 533 points. We divide by 61.47, 8.67% down. So that's the problem with February. From the highs in February to where we're at right now, down 8.67% in the last 30 days. But that's only on the S&P. NASDAQ. From the highs in February, 20,100 to the lows right now, subtract 17,468, down 2,632 points. Divide that by the 2,100. It's a 13.09% loss. Shouldn't say, let's go from the February highs, can't type, and let's just do, this is the SPX. down 13.09 from the February highs, and that's the NASDAQ. So, interesting question. And by the way, this came to me via an email. Thank you for those who are willing to email me. And I will make this so that we understand those are the email parts. I was reading in Barron's of the dire consequences of Trump's policies. However, I wonder if things are really going to be that bad, or the writing's reflection of the Wall Street Journal and the anti-Trump position. I guess time will tell. So the interesting part, does anyone know what caused today's drop? Can anyone tell me what caused today's drop? Did anyone take a wild guess? What caused today's drop? Because we should have, technically speaking, we should have had a bounce. Recession worries, no growth. Great comment, Maud. Lance, your president screwed up. I'm pretty sure he's your president too. You just happen to be an American living over in England. Yeah, I mean, the main cause was Sunday's Fox News event with Maria Bartiromo, and Trump couldn't keep his mouth shut and basically said two things. More pain to come, and don't look at the stock market, which was interesting because this kind of pisses me off again. I wish Trump would shut his mouth. More pain to come. We knew there would be some pain going through, and I guess the answer would be going through and auditing the government. Anytime I'm audited, even though I've done nothing wrong, it's a major pain in the ass. I've got people for the Securities and Exchange Commission that audit my books, my trades, no front running, where my money goes. It is ridiculous. Never had a problem, never been fined. I'm totally clean. We knew the government wasn't totally clean. But to suggest that that's a problem for our stock market doesn't make any sense. Those are two separate items. I don't know if you remember, but I remember Trump's comments during his election. Look at the stock market. So I guess there are times you are supposed to look at it, and there are times you're not supposed to look at it. Well, it's my industry. I look at it every freaking day. Instead of being political, he could have said this in many different ways. But he fueled the ego and the, hey, I'm doing things for the greater good. Well, maybe, maybe not. Are the tariffs an issue? Not really. But if you're going to tell the American public there's more pain to come, what will the public do? What will the public do? If there's more pain to come? Panic is a good one, which the volume maybe not do it, but Maud, you hit it on the head. The public's going to stop spending. We're going to start to save. I'm in that mode right now because of taxes. We're going to start to save. And when you start to save, when 80% of your GDP is based on consumer spending, That's not the way to increase the GDP. That's not the way to keep the economy going. That is the way to give yourself a self-imposed recession. And so that set us up for an easy break on the 200-day. I'm going to go through those comments. History shows no one wins in a trade war. The last 8 years contradict that. The last 8 years we've had tariffs in place, and other countries have had tariffs on us. And to be honest with you, we've kind of been in a trade war since the mid-90s. But most of it's come to us, where, I'll be an example. We don't sell our produce into Canada because the tariffs are hundreds of percent. So we're locked out of Canada for trading produce. If you give me a quick second, I was doing some research, but I don't have it completely found out or done, but I thought I snapped a picture of it. The Canada tariffs imposed on the United States is 270% on milk, 245% on cheese, butter is 298%, chicken is 238%, sausages are 69.9%, barley and seeds are 57.8%, eggs are 133%, wheat's 94%, meats are 26.5%, and these all come from the Global Affairs Canadian office. So those are quite a significant amounts of produce that is significantly tariffed. And do you know when those tariffs went in? Milk, cheese, butter, sausages, chicken. Those tariffs went in the late 90s, like 97, 98. And yes, there's tariffs on copper and steel and cars and TVs, computers, other stuff. But there's a huge amount. It's shocking on some of the tariffs that's going in and what's here. But it didn't matter. It didn't matter that we couldn't sell our product into Canada with some of these tariffs. Canadians were protecting their rather small agricultural industry, and they were protecting their own. Free market allowed us to sell our product elsewhere. But that's one for Canada that's like, hey, I mean, it's a tit for tat. And that's where I'm going to go so far as to say, in trade wars, in our one with Canada that started technically in 1997, both countries have been doing okay and fine. We're now at a point there where we have a president that's not okay with it. Could the Canadians give some? Could the United States give some? Definitely. If we had a Canadian here that was in Canada, I'm curious to think what they're going to say in the election that's coming up here in October. I definitely would like some information on that, because right now they're putting in a stand-in until the October elections, as Trudeau is backing out of his position. So, interesting comment on that email is, I do think we need a market correction, and understand we've been short a market correction for 4 years, which with a huge growth on our stock market. So, and yes, whoever's typing that in about the Canada, I'm going to have you do some more education for me. And yes, it is Mark Carney, if I'm saying that correct. But okay. and I brought a little more information here on what tariffs are going to do for US. I mean, we get about 30% of our soft lumber from Canada at the expected current new tariffs that are going in on top of the 14.5% that we already pay to Canada for their lumber. It's interesting because everything I'm reading is that this will change home prices. Will rise, home prices rise by somewhere between 7,500 to 10K. Which, if you're looking at a standard $330,000 average price home, we're looking at about 2.5%. I don't know how this number was come up with. It seems to me bigger homes that use more lumber, but home prices rise by an average, and this was the United States Homeowners Association that came up with this number. Home prices are expected to rise if the tariffs go into effect, and I think it was for more than 6 months. So home prices are per the U.S. Home Builders Association, if tariffs are longer than 6 months. Again, I have not checked that all together. I don't know how we have 6 months of wood or supply sitting around. It might be on the rate that homes are built. So I actually don't know how to, I haven't figured out how to price check those, but 2.5% when it's wrapped into a 30-year loan, it's not earth-shattering. A quarter point is more important on the price of the home through the life of the home because it's compounded. So I don't know. I don't know. The reason why I brought out my charts here, we're obviously bearish, but I brought it out to 11 months because our next maybe expected spot to stop might be 5,400. More likely, we're going to stop somewhere between 51.19 and 49.53. Kevin, why would you say that? A 20% drop from 6,100, which is a market correction, putting us into bear market territory, that would drop us down to 5,000. Are there things that can stop this? Yes, we've got 4 things. 4. Let's call them bear market stops. If I could only type. Bear market stops, 4 of them. Pretty simple, right? Number 1. Canada and Mexico come to terms with Trump. And it's not the other way around. Is that fair for Canada and Mexico? Not necessarily. It's got to be Trump's way or the highway. Can they negotiate? Trump is a master negotiator, and a lot of these tariffs are being pushed off for another 30 days. And the important ones, I don't know how you define important, right? But the more important ones, meaning ones that more money travels between the two countries, was lessened to 10% or not even applied. So there already has been some wiggle room. Number two, no brainer. A Ukraine-Russia resolution. I've got some people that lived in Ukraine. By God, they hate Russia. This war for them has been happening since 2011. And both sides have ignored treaties, and I mean, it's actually a mess. On Facebook, I brought in a side where people got really pissed off at me, thinking, "Oh, I'm siding with Putin," even though I clearly state that he's a dictator, a lying son of a bitch, and he's communist that hates America. But apparently, I'm siding with Putin. Great job reading the whole effing post, people. Not you guys. But yes, there's atrocities on both sides. Not following treaties on both sides. Which treaty is more important? Is it the Paris Treaty, the Treaty of Versailles, the most recent NATO treaty? There's a half a dozen treaties that were happening that broke these two countries. If you were to ask me, we are 2 to 4 weeks away from a treaty, or one country is going to get wiped out. My bet would be that Russia wins. Russia wins for one single reason. They have more nuclear capabilities. And believe it or not, Putin is crazy, or he's dying of cancer or dying of something where he has limited time to make his mark, or both. So here we go with a 2 to 4 week time frame, or this will be going on and will end extremely badly for a country, most likely, and it'll go on through the whole Trump administration. Could Zelensky, whatever, get out? I bet you he has billions of dollars stashed away. The people that I know that have lived over in Ukraine are furious. The person that I know that lived in Ukraine that is more Russian is furious at Ukraine. I've never lived there. I'm not part of it. I don't know. And this one will be an interesting one. Number 3, tax breaks. Tax breaks can come in a couple different ways, but the tax breaks are going to be profitable in either a deficit cut or cash in our pockets. How neat would it be to see if we can cut the deficit by $1 trillion in a year? Would be amazing. And actually, boy, I told you 4 bear market stops. I want to push that up to 6. I just literally thought of two other. Number 4, better China relations. We're not fearful of Russia. Russia is not the enemy of capitalism or Western civilization. Russia has a big stick, but China has a military, second largest economy in the world, better trade relations through Asia and Europe, better trade routes through Asia and Europe, print their own money. They are the ones, if you want to go 1-2 for the heavyweights, they're number 2. That's the reason why we're looking to get called out of Baidu right now. Doesn't mean we won't throw some long calls in there for a couple of years in case we're wrong. But as much as I love Baidu, as much as it's been the company that's made me the most money in all the years I've been trading, it doesn't work right now. And you have to learn from your past history. It didn't work through Trump's first presidency. As I was sitting here thinking, I actually thought of a couple more things, 2 more things that maybe not are bear market stops, but a 35% drop makes the market cheap. And you guys are going to notice we're building cash in your portfolios. If we were to take off all the puts, you would have a pretty significant cash hoard. What we do is we build up the cash to purchase more shares. What sucks at times is when we purchase those more shares and the stocks don't come back. Baidu and Disney. We will be probably taking a loss for some people in Baidu that we've been adding shares to, that we've been moving some money into. If we decide to dump those shares, we've ruined our process. But you have to look at opportunity costs. I'm going to go through that. But if we get that 20 to 35% drop in the market looks cheap, we have a way to go higher. And it's a way to go higher that we can then continue to build on. So don't be surprised if in the next couple months we keep building cash. We did add some shares here recently, and we did it a little too early. We're going to still protect. We're going to wait till we have a more definite market bottom versus the technicals on individual stocks. And last but not least, wow. Last but not least, how would I say this? I'm just going to put it kind of very general. The U.S. economy resets. I don't know how I'm saying this one, but I've heard the comments for a while now on immigration, right? Well, we don't have the people to pick the strawberries and the oranges and all that kind of stuff. I do believe that if a person is hungry enough, they will work those jobs that nobody wants to. This is an entitlement problem. And I might go ahead and I might put that in here as an entitlement problem. I will go so far as to say, someone asked me recently, Kevin, you're so Republican that you don't pay attention. Name to me who is in the cabinet for Trump. And I named a couple. I think the AG, she's kind of cute. She's cute when she's mad. She reminds me of my wife. I haven't necessarily done my research on the cabinet. And I know those that are in the medical field are worried horribly about research and development, vaccines. I'd like to say Kennedy proved himself somewhat, but then is he being a politician and saying something to say it so he can get into the position? Our U.S. economy might reset. And it might reset to the way that we'll see some lowering of home prices, hopefully that will also lower incomes. I'm calling it a U.S. economy resets on the workforce and where we go to jobs. Notice in these, I haven't put anything in inflation yet. I'm not sure where things need to come down in inflation other than eggs, because we killed off 11 million chickens, but to redo chickens, that's like a 6-month period of time, and we'll have the million chickens back in place. I don't know where to calculate our inflation problem. We're kind of at that standard 3% inflation. Yeah, it could be 3.6, it could be 3.8. I don't have inflation, though, as something that stops. Excuse me, I've got the sneezies today. I don't have that as something that stops our bear market trend right now. If you were to ask me, I totally see 5,000 being our stop. That would make sense to me. That's in the range of yearly lows, which is actually 49.53. Someone came up with a $4,200 down movement, which is at 34.6%. A Fibonacci, an Elliott wave, a simple calculation. Do I think we'll get down to 4,200? I don't. We haven't had a pop back up, and blah, 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 blah. I get it. I see it. I understand it. But I wholeheartedly could expect and could see something down at 5,000 by May. All righty. Here we go. Earnings dates. I was wrong on some earnings last week. I don't know what I did wrong. Maybe the briefing.com website wasn't the same, but wrong on some earnings dates. You'll see them. Interesting thought process on the big picture. There is no Trump put. Trump puts don't work on tariffs. The absence of a Trump put heightens the market sense of uncertainty. I think Trump over the weekend heightened the sense of uncertainty. What it all means, are we looking at a 20% drop from the peak? Probably. lower confidence, lower floor for the president's tolerance of the stock market losses. We are doing this to ourselves. The question is, are we doing it to ourselves for the greater good? I found it interesting. If you looked at last week's unemployment numbers, even with the recommendations, remember, Musk doesn't fire anybody. He only makes the recommendations. With the losses of people that are coming out of the government, I was shocked in January to see a huge rise in the numbers when you typically have negative numbers from the seasonal Christmas time and people losing their jobs. Give them a couple weeks, they file unemployment in January, and it did go up. But to see that there were so many new jobs still in place was shocking. People are moving out of industries, going into another. That's what got me to think about the reset. Non-farm payroll was 151. Private payroll was 140. And that's after apparently thousands, tens of thousands of jobs disappearing from the government. So we do have that shift. And that's what's got me really spending a lot of hours looking at where jobs are going. Obviously, we're bearish on all three indexes. Yes, some of these earnings you probably saw from last week, for whatever reason, briefing.com earnings has thrown me for a loop, or I looked at the wrong stuff. This week is CPI and PPI numbers. Very interesting. They're only supposed to come up 0.3%. How important is that at this time? Well, if we replace some of the higher numbers that came in last year and we replace it with a 0.3 or a 0.2, where we do get better than expected CPI and PPI numbers, we put inflation back in that 2.3 to 2.6 range, which would be amazing. Our week is hanging on the CPI numbers. If it's a tenth of a point higher at 0.4 for either one, then we will be in trouble. That means we have 3% inflation, and it's going to stay for a long time. All right. Boy, I went to a lot today. Some of these are a knock on Trump right now. Trump says the transition period for the economy is likely. You can't really watch the stock market. I feel he's turned. He brought that up in his I can't think right now. When he was trying to become president, he was out there politicianing. That's not the word I'm looking for. Whatever the word is, when he was running for president, he threw that in on how the market was falling under Biden. It bugs me because it's my industry. Yes, there's some things happening. The question is, will it be for the greater good in the end? And really right now, some tariffs I think don't matter, but that's easy for me to say because I don't buy a lot of stuff from China. I like buying America made. I buy my automobiles from Ford because they are the only ones that didn't take the government money back in the day. Trump rejects pleas from businesses for more clarity. The businesses want more clarity on tariffs. His comment, he brain farted, stupid. They'll use the soundbite. They always say that. We want more clarity. In previous administrations, you brought CEOs in for help on the country. I find it shocking that right now he's not giving the same courtesy to the CEOs that last presidency he wanted, and this time he's just telling them, chill out. You don't need more clarity. BS. He really screwed the pooch over this weekend. One more article. Trump's an agent of chaos and confusion, economist warns. But the U.S. recession isn't in the cards yet, and it's truly not. We are a long way from a recession. But if things keep going the way that they're going right now, we will technically or most likely be in a recession the beginning of next year. So if things don't change and we go through this zigzagging back and forth on policy, mathematically, very easy to see how next year we will be in a recession. We will have two negative GDP quarters, one over the other. Layoffs announcements soared to the highest since 2020 as Dodge slashes federal staff. This just goes to show you again, whoever Jeff Cox is, who I read a lot of his stuff on CNBC, can't fire anyone. He hasn't read what his special designation is. He can only make the recommendation. So interesting that, again, national news, he has this wrong. He didn't see where the job cuts are coming from. It's not Doge. They make the recommendations. It has to go through a process. He would like certain people gone. But you gotta research what you're reading that's out there. Someone made a comment about 5 income streams and wanted to start an income stream. I just put this in here for one reason, and I think it relates to when you trade in the market or you spend your time in general. It really talks about knowing your numbers, how much you're going to invest, potential loss, all those kind of things. But the common traps that people don't understand when they start their own business, you underprice your services. You're trying to sell, and it could be for yourself to just get your foot in the door versus goods. You underprice your services and you find it's really hard to raise them back up, which means not only number two, are you failing to account for your time, you're not valuing your time as it's worth anything. And then 3, overlooking opportunity costs. A lot of this that I went through this article have to do with starting your own business or even looking at stocks that you want to invest in. And then I found, here's how tariffs will hit U.S. housing markets. This is a little bit, actually, this is just backing up what I came up with before. That I wanted to show you where I found it and how I started to do some of the research. So with that said, I know it's been a rather long one tonight. What questions do you guys have for me that I can answer for you? What questions do you guys have for me that I can answer for you? Yes, on 5 or 6 of our core holding stocks, we did not have protection on, and when the market opened, oh my gosh, of course. Thank you for reminding me. Kevin, and I think, let's find out which one you were talking about. Was it Apple? I don't think it was Apple, though. I think it was... I want to go through and look. Give me a quick second, but I will answer your question. Wasn't Apple. Is it Micro? MSTR. All right. Yes. So I will explain it to you, but Kevin, how did I lose over 10% in micro strategies? And you can see the drop. Let's take this down a little more. Let's go down to a month. So here's the problem. When you put a 285 position in and it opens somewhere in the 75s and falls down to 260 almost instantly, all a stop loss is all a stop loss is, it becomes a market order when the stock opens, actually when the stock falls below that price. So even though you had one at 285, when it opens up at 272 and doesn't register because it's selling off so quickly, clearing out futures, your order is a market order that falls behind it. The reason why you lost $25 on your purchase the other day, meaning you got into it at what, 300, you lost $15, you thought you put a stop loss at 285 to protect yourself, you got sold out at 260 and change, is because all a stop loss is a market order when the stock falls below that price. That's how you lost, and it was filled at 261 today instead of 285. MicroStrategy's never registered at that price. Number two, when you're purchasing that stock, you did not do your due diligence. Yes, some of us are in it, but we are in it with $175 covered call credit. We did not jump in at 300 and just buy the stock because it's not fundamentally sound for that. That is also why we don't use stop losses. We entered the position with protection, some 44% to the downside, because it's a volatile stock. So two problems with this one. Not fundamentally sound just to purchase the stock without some kind of protection. Number two, a stop loss is not protection. You thought you're going to limit the loss to only $15. You picked up another $25 to the downside today because you're using a stop loss that became a market order when the stock could register your price, which is behind all the weekend hedge funds and clearing out all the E-minis and the futures. You got hosed. So that's why you ended up losing 10% today, and it sounds like overall you lost about 13% in total. All right, any other questions? Any other questions that I can help you guys with? Yes. So that's another great question. Yes. If we do fall another, I don't know, 10% to S&P 500, 5,000 level, we will be adding extra puts and FPY puts to make up more on the way down. So yes, kind of neat. Again, And let me say this one more time. I'm pissed off about today. I'm not pissed off about the year. Yes, some things are down. Yes, we did a great job of making up some downward movement. Yes, we have money to add more shares, but we're not doing it until we find a bottom that we're comfortable with. But by no means have we thrown in the towel, and no means are we throwing up our hands and saying we're screwed this year. Couple things get fixed. We're back to the races. There are a couple big things that have to be done. I know some of you have talked to me and you said, my God, look at your list, Kevin. I see it. I get it. I look at it every day. I spend time going through this every day. I understand it. Ukraine and Russia, I don't know. Better China relationships, I don't know. We can work through all the other ones. Does it mean we're going to add more protection and be protecting positions with extra on them? Better believe it. But none of these can't be resolved or taken care of. And the other question, so should we just go to cash? No. If you can predict the future that good, then go to cash. But that's a really foolish thing to do and to be in. You protect yourselves in the markets. How awful would it be to go to cash and then you get the bounce up? Well, I'll buy back in. You might, probably not. Add your protection on, protect to the downside, build up your cash hoard, add more shares. You'll get an exponential return when those stocks come back. I said it a couple of weeks ago. It's a process. It's a process without a time frame, because not one group in this group of 30 or so of us today can ever predict the market. We get an idea, we see a direction. To think we've got market predictions under our belt, if we were, we'd be managing hundreds of billions of dollars and we'd be good. You know what's nice? You're not being told to sit and wait. You don't have money sitting in funds which are raping you in fees. We're creating cash on the downward side to convert to more shares that will go higher sometime in the future. We're not hiding from our phones. We're talking to you. Next week, I'm going to show you guys a couple of the ads. I'm getting bombarded with ads right now to put people into annuities. And none of this does it talk about protecting or helping you people. It actually legitly states in there how to make more commissions. I'm not putting you into annuities to make more commissions for me. There are certain parts of insurance products and different kinds of opportunities in the stock market, but I'm not in it to make me a commission on you. I'm in it because my money's in it too, doing what you guys are doing. I've seen it work. It's going to work again. We're just in a trough in our process. Any other questions you guys have? I didn't see any come in. So if not, I've taken up an hour of your time. Guys, I want to wish you a good evening. You guys have a good evening. It was a very busy weekend for me. As soon as he started speaking on Friday night, I knew we were in trouble. I just wasn't sure how we were going to take care of things. But guys, okay. Have a wonderful evening. Appreciate you guys being here. Guys, have a great night. I will work on getting this posted tonight. I'll work with Dave Westlake and see if we can't get things together and going. But I do appreciate you guys. Look forward to seeing you next week. You guys, don't worry. We're always watching, so you don't have to. And know we're doing the best job we can to make sure we got your positions protected. Guys, take care. Have a wonderful evening. I look forward to seeing you next Monday at the Hurley Investments commentary. Good night.